Well, joining me now with more is Rebecca Walser. She's the CEO of Walser Wealth Management. Rebecca, great to have you in studio.
Great to be here, Kristen. Thanks for having me.
Yeah, so good to have you. Of course, just 30 minutes until this market open.
Yep.
So much to digest this week, including the PCE data this morning. What is your take?
I think this is good news because CPI came in hot this month. PPI came in hot this month, which obviously made the markets like, are we going to have inflation engaging this year? And I do still think it will come, especially with the tariff policy that we're seeing. But this is a breathing room. It's in line with expectations, nothing unexpected. So I think that the market will at least relax on that front, and it gives the Federal Reserve more breathing room.
Yeah. So in a sense of that breathing room, do we anticipate any rate cuts at all this year?
Oh, it's tough because, obviously they talked at first about 2 cuts, then maybe 1 cut. But then if you look what's happening, the market is naturally coming down. Our 10 years is down to the 4.2 range when it was as high as 4.7, 4.8 almost. So it's already naturally happened organically with global demand and global slowdown. And so we might see it, but it's not necessary right now with the 10-year already pulling back so much.
Yeah. We've had a whole host of other economic data in focus of late, notably consumer confidence, sentiment, retail sales data as well. Retail sales obviously impacted by some one-off factors like the wildfires. But what is the big picture economic takeaway that you're gathering?
Unfortunately, it's a bunch of headwinds. It's definitely a sea change of kind of the good data that we've been we talked for so many years. Powell has got so much labor support that he can continue to do his rate hikes. Remember when we were going through that 2023? It's the opposite now. We're seeing retail sales come down. We're seeing, obviously the consumer confidence was a pretty big shocker because it went from 74 in December to 71.1 in January to 64.7. That is a massive drop in just 1 month. And I think it was maybe the consumer saying, hey, we're out of our stimulus checks. We know that pretty much their reserves from COVID, we used to talk about for years, pretty much been exhausted unless you're the top 10% of the country. So people feel like I don't have the reserves. Prices are still higher, and I don't have the money. So it's a lot, unfortunately, Kristen, it's a lot of headwind data that we're seeing that's on to the negative.
So let's also talk about tariffs, because that has been rhetoric, of course, from the White House that has ramped up in the past few weeks. Was a slow start, I would say, after the inauguration, but certainly we do see that the president is ready to move forward with those levies, double-digit levies on certain countries. How should investors respond to that?
I think that this is an art of the deal type of thing with this presidency, and I'm not going to say it's going to be a tit for tat, but if it develops into that, investors need to prepare for volatility because it is going to be some, machinations going back and forth. We know that Trump has clearly said now that he will implement on Tuesday the 25% on Canada and Mexico, and he will add an additional 10% to what has already been applied to China, which is 10%. So we are now starting to see China obviously potentially retaliate, and so this is very strategic, and I don't think that investors are used to seeing a presidency use these kind of economic policies to get their policy implemented, and it makes us nervous because uncertainty creates volatility. So investors need to be prepared to understand that this is going to be more volatile, and it's going to take some time, at least 6 months, maybe 9 months, to really figure out what is going to actually be implemented and happen, and just be calm through it. I know it's hard to say be calm through volatility, but that's what if you can be prepare ahead of time for the storm, then don't be so nervous while we're going through it.
So it's interesting because today's the last trading day of February. We know historically February is a month of underperformance, and the major averages are several percentage points from their all-time high. So as we take that into account, of course, with the economic landscape, do you think that there perhaps is further to slide before stocks can recover? Where do we go from here?
Yeah, I do unfortunately see that we are still in a pretty much overbought situation. The market has been priced for perfection for quite a while. We're not in perfection, and we're about to go into volatility with these policies. So I do see further pullback, and there's a lot of retail that says, okay, we could buy the dip, and retail investors are still really on that bandwagon. If I look at the institutionals and the hedges, I see them selling out a little bit more. So I would say if we're looking at the smart money, they see volatility coming, they see it's maybe a little bit overbought, and they are selling out. So I do expect further price action to the downside.
Interesting. So in terms of how people should be putting their money to work, what would you tell them?
In a year like this of volatility where we do see a lot of global macroeconomic changes, which we haven't even begun to discuss, we've just really been on, inflation. I would say that commodities are going to be more of a stalwart, investment for 2025.
So when we look at the global landscape, then Are there opportunities or ways that people should be looking at that particular landscape to inform their investment thesis?
Well, it's so funny. We saw this massive influx into Alibaba, right? After the DeepSeek information came out of AI. NVIDIA, I think, did a really good way of navigating on this week on their performance that came out on Wednesday. So, but it does speak to, should Americans feel so positive about the U.S. is going to control the AI space? And the answer, I think, is kind of a no, because we saw inflows going into Alibaba that because of some of the AI stuff and the stuff that they are implementing through their channels. So I do think that the international space is one where we might look outside, especially, I hate to say this, but if the United States is not going to protect our IP as we have it, as they continue to steal our technology and then make it cheaper, then we have to really be concerned about how much R&D money is going into just US side AI. And so internationally, that's an issue. But do we want to invest in China stealing from us? That's another issue. So it's a lot of machinations.
Quickly, Rebecca, before we have to let you go, just due to timing, do you think NVIDIA comments and results did enough to quell some of the DeepSeek concerns?
I think that they did. I think they navigated it well, but this is the beginning of the story. It is nowhere near the end.
Rebecca Walser, great to have her in studio.
Yes,
Rebecca,
thank you.
great to see you as
so
always.
Much.
She's the CEO of Walser Wealth Management.